Right now, Oracle is reporting a record-breaking $553 billion backlog. It's basically just a mountain of signed contracts from customers who are standing in line, checks in hand, just waiting for Oracle to finish the work. To the average investor, that sounds like a company in its golden age. The stock price is through the roof, and the headlines are calling the demand insane. But then you look at the ground level. At 6 a.m. on March 31st, 2026, 30,000 employees, nearly 20% of the company, woke up to find they were fired via email. We're not talking about entry level and new hires. We're talking about the experts who build the place. They woke up to wipe laptops and revoked access before they could even finish their morning coffee. Now, how can a company with over $500 billion in guaranteed future revenue be acting like it's in this state of total financial panic? By the end of this video, you will see why these 30,000 careers were sacrificed in what I call the prepayment paradox. To understand the prepayment paradox, we have to look at the gap between what Oracle says they are worth and what is actually in their bank accounts. On paper, Oracle is a titan, but in their actual wallet, there is a massive hole. Let's look at the two numbers that show why they're backed into a corner. The $153 billion debt. This is Oracle's credit card bill. To stay in the AI race, they are borrowed $153 billion from banks and investors. It's a massive way that requires huge interest payment every month just to keep the company running. Negative $24.7 billion free cash flow. This is their annual deficit. In simple terms, free cash flow is a spendable cash a company has left in their pocket after paying for all its operations and equipment. Over the last year, Oracle spent $24.7 billion more than they actually brought in. Essentially, Oracle has all the future promises in the world, but they are out of the spendable cash to pay for the present. They're digging a deeper hole to build a taller building. To breach the cap without going bankrupt, Oracle has entered into a high-stakes partnership with two other giants, Nvidia and OpenAI. To the public, it looks like a standard tech collaboration. But under the hood, it's a complex financial dance designed to create wealth on paper without using a single dollar of actual cash. This brings us to a mental model that explains exactly how this cashless empire works. Instead of a normal business deal where one company pays cash for a service, these three have built a circular funding loop. Think of it as a cashless economy between three giants. They aren't trading dollars, they are trading valuation. The goal is to keep their stock prices at all-time highs, even if their actual bank accounts are empty. Oracle has committed $40 billion to buy Nvidia's Blackwell chips, the high-end engines required to run modern AI. This move tells Wall Street that Oracle is a serious player, which keeps their stock price soaring. In return, Nvidia gets a massive guaranteed order that keeps their valuation at record highs. Oracle signed a $300 billion contract to build a Stargate, the largest AI supercomputer ever conceived. This makes Oracle the landlord for OpenAI. But why is OpenAI interested? Because training the next generation of AI requires more power and space than almost any company on Earth can provide. They need a partner who can build massive gigascale campuses faster than anyone else. Here's the loop. OpenAI needs the server space, but they also have a priority relationship with Nvidia. So instead of OpenAI paying Oracle rent in cash, OpenAI secures the GPUs themselves and delivers them directly to Oracle's construction sites. Oracle doesn't receive a cash wire transfer, but they book the multi-billion-dollar value of those physical chips as revenue and backlog. This makes the company look liquid and successful on paper, even while they are sitting on $153 billion in debt. But this leads to a much bigger question. If Oracle is building the most advanced AI infrastructure on Earth, and they are just fired 30,000 of the people who were supposed to run it, who is actually going to manage the machine? Put a pin in that, because Oracle is betting on a strategy that essentially allows them to fly the plane without a crew. To understand that gamble, we first have to understand what this machine actually is. Because most people have no idea what Oracle actually does, and yet it effectively runs the world. Oracle didn't start in a garage. It started as a Cold War mission. The company was founded to solve a massive data crisis for the CIA. The project was so secret it was codenamed Oracle. Their task was to build the first ever relational database, a way to connect millions of scattered data points into a single searchable map. It was built for national security before it was ever sold to a corporation. During the PC revolution, Oracle moved in to become the pipes of the global economy. They realized that every bank, hospital, and government agency was drowning in data. They built a backend for nearly every tax record and bank transaction on Earth. If you've ever swiped a credit card or filled a tax return, you've likely used Oracle's infrastructure without knowing it. The strategy shifted from just storing data to owning the workflows. Oracle spent billions acquiring competitors like PeopleSoft and NetSuite. They become the operating system for the Fortune 500, managing everything from payroll to global supply chains for the biggest companies on the planet. Today, Oracle is undergoing the most radical shift yet. They are transitioning from a software company into a construction giant. Oracle is currently managing dozens of giga-scale data center projects like Stargate. These aren't just server rooms. They are campuses that consume more electricity than a small city. They are building the factories where the world's AI is made, and it's costing them every penny they have. This massive, high-stakes construction at any cost is the signature of one man, Larry Ellison. To understand Oracle's current financial panic, you have to understand Larry's win-at-all-cost history. In 1990, his drive for growth nearly led to bankruptcy after an audit revealed the company had overstated earnings just to hit his impossible sales targets. He's a visionary who thrives on high-leverage gambles, whether it's buying 98% of Hawaiian Islands or famously selling software before it was even written to capture the market. He is currently using Oracle's massive scale to execute a sophisticated game of survival math. This survival math isn't a sign of panic. It's a perfected version of startup reality played at a global scale. In high-growth tech, there is a specific kind of financial limbo. You have massive multi-billion-dollar deals signed on paper, but the actual cash is tied up into the future. At this level, those signed contracts are pure leverage. You show them to the world to prove your trajectory is vertical, which allows you to keep the engine running and the stock price climbing while you build the actual infrastructure. It's a calculated move, using the momentum of unfulfilled deals to maintain dominance, knowing that as long as you keep growing, the real money eventually catches up. Larry Ellison is playing this startup game with hundreds of billions of dollars. He's using that $500 billion backlog as a shield to buy himself time while he figures out how to fix the massive hole in his actual budget. Remember that pin we put at Oracle plan to fly the plane without a crew? The reason Larry is so confident in this trade-off was revealed during the Q3 2026 earnings call. He made a statement that explains why those 30,000 roles, many of them senior experts, were suddenly deemed redundant. He revealed that Oracle is now using internal AI agents to handle the system architecture and maintenance that used to require thousands of engineers. This wasn't just a cost-cutting measure, it was a total pivot. They are replacing the maintenance staff with a machine designed to fix itself. The strategy here is clear. Oracle is trading human intelligence for physical compute assets. The biggest mistake you can make right now is thinking that this is just another round of corporate layoffs. It's not. It's a fundamental redesign of how the most important systems on Earth are run. Oracle is simply the first giant to openly bet that in the AI era, hardware is more valuable than headcount. By letting go of the senior experts who build their foundation, Oracle is moving towards a future where the machine manages the machine. But Oracle isn't an outlier. This automated playbook is already being used as a blueprint by other giants. They aren't waiting to see if Larry Ellison succeeds. They are already running the same high-leverage math behind closed doors. I'm currently looking into other players who are following this exact same trajectory, shifting from human-led companies to automated empires. I'll be breaking that down in our next deep dive. I would love to hear what you guys think about this episode. Hope this was helpful. I'll see you in the next one. Bye.